Why I feel in the face of all the problems in the world impotent, and why I somehow cannot manage to transform I. Now here we get to the real problem, because we're always telling each other that we should be different. Now I'm not going to tell you that tonight. Why not? Because I know you can't. Nor can I. That may sound depressing, but I'll show you it isn't. It's very hard. But everybody, you see, who is at all sensitive and awake to their own problems and human problems is trying to change himself. We know we can't change the world unless we change ourselves. So when we are aware of the ego I, we are aware of this chronic tension inside ourselves. And that's not us. It's a futile tension. So when we get the illusion, the image of ourselves, married to a futile tension, you've got an illusion married to a futility. And then you wonder why I can't do anything.
Good morning, everybody. Welcome to today's live stream. We've got some important information to talk about today. Shoot, where to begin? Bitcoin, right? Oh, I need to record this. Let's do this. Nice. I left another tab open. You can see. Nice. Cool. I don't know which one's the right window. Hold on. I never do this. Why did I do this? Shoo. Excellent. That's that one. Let's do this. Okay. We need to talk about whatever the hell's happening on Bitcoin, and what a better way to do it than to compare it to previous instances of volatility. Okay. So this current candle is actually very similar to a previous move. And it's this bad boy right here. The short squeeze. And why are these similar, you might ask? They both have the following symptoms. Both are preceded by an extremely tight period of price volatility, so a very compressed range with a lot of predictable stop losses outside of the range, okay? if you have a bunch of people with really tight trading ranges making really tight trades, well, they're going to use a lot of leverage, and then as soon as it moves out of the range, well, everyone has the same stop loss in the same place, and it results in a rather significant, upward move. And really, our prediction now is going to be a bit foggy, and I'm okay with admitting that, because I'm no god. I have anything beyond this point is really just going to be speculation, and I admit that, because this is not the cleanest chart that I would like to trade, and anyone else who says otherwise, well, I wish them luck. So, our most notable piece of information here is the 250 period distribution. This I'm sure on. This already happened, so I can talk about it in confidence. Right, when we re-entered the 250 band, we reverted exactly to the 215 mean. If you want to see where I talked about this previously, go watch my February 18th video. We talked about how this pivot right here was crossed on February 18th, and our target was this mean, the 250 moving average. Lo and behold, that did play out quite nicely. And as far as the actual short squeeze scenario goes, I do have to say that let's do some quick volume analysis. Right, and I'm going to use the combined pairing here. Since one good point to make here is how much of this is an actual short squeeze and how much of this is actual buying pressure. Now, I did make a mistake. I did use ignition momentum interchangeably with short squeeze. Ignition momentum is a result of short squeeze, but it's not inherent to it. Say, all squares are rectangles, but not all rectangles are squares, right? So ignition momentum can happen as a result of a short squeeze, but it can also just happen of regular buying power. And it's a little bit harder to read. You're going to have to look at the short to long ratios on that as well. But, yeah, let me rephrase myself. This is an excellent example of ignition momentum, which can be a symptom of an over-leveraged market. I had a comment from Cham Sum who pointed that out to me, and I do appreciate it. Thank you. I corrected my mistake there. So, yeah, absolutely. We did have this surprising spike of volatility, and even though the long-to-short ratio wasn't near previous all-time highs, the ignition momentum still did, well, capture price action. So, one important thing that we do have on the 1 hour chart is the wave PM cross, which happened right here. Okay. Well, that typically does result in a significant breakout. However, the wave PM, or rather 3D wave PM, would care to differ. And it's actually really cool to see how this was playing out right now, where I actually don't want to bet on any subsequent upward movements until I actually see the required force to cause the re-expansion of all the periods above the 120 to 600. Because right now, volatility overhead is doing a really good job of suppressing price action, or rather, suppressing subsequent trending. So, really good example of this in our previous runs here is this bit of expansion here. Notice how the re-expansion never hits anywhere under that is red, right? And it happened here as well, and here as well. And then this is a failed example because we actually did get new trend and new expansion as a result, several times actually. However, the more mass you have, the less likely that scenario is going to come true. And because we have literally maxed out all of our periods here, it would be very improbable that we would see true net expansion up above these higher periods. Because even though our shorter periods are compressed and a typical wave PM signal all throughout here, it does imply bullish price action in a vacuum, and that is very important to note. The 3D wave PM would care to differ, and I would consider an improbable scenario that we would actually see true net expansion up beyond, well, say, the 120 period. Well, let's do the truest 140 period for the time being. So let's load up a 140 period on this chart, just so we can have a good example of what's happening here. Or rather, of what we would expect the range to be compressed by. Or even better yet, how we would define the compressing lateral range. Okay. Wow, that's really cool. It's almost as if the volatility overhead smacks down price because of the compressing distributional periods. Whew. So, we had some really cool confluence here. We had the 3.2 standard deviation on the shorter time frames, and we had the volatility overhead period smacking down price as well. So, I'm not saying price cannot go above this value. What I'm saying is it would be very difficult for price to go above that value because it would require an unrealistic amount of force. However, as we have just seen recently in this market, well, players are willing to enact unrealistic amount of force in order to get the price action that they want. And that's why I consider this a murky chart. Because we have typically what I would consider very strong signals that imply lateral trading. However, on the other hand, we are seeing volume that implies people are willing to apply force that would not typically be recognized, well, in this kind of market condition. So that's why I'm not willing to have an opinion. All right, my gut reaction is, okay, we're going to get a lateral trading range. We have this compressing range. It is very probable that we're just going to see us trade sideways. And that has been my prediction since, well, the candle actually happened. And lo and behold, we have done nothing but have a high price volatility trading range. And, well, it's choppy. I don't want to trade it. I haven't traded it. And I think if you want to trade the high price volatility in this compressing range, you are more than welcome to try. Just be willing to stop out or liquidate your account due to the unreasonably high price volatility in the range. Really, I think if you play below the 15-minute chart in this kind of time frame, you're going to have a really bad time unless you're trading mean reversion positions. And even if you were trading mean reversion positions, well, let's actually see how those would play out, yeah? Like, we only had one potential viable mean reversion position right here on the 40 period, and it was a lateral mean reversion trade. So the problem with this is you have macro level conflicting order flow. Okay? If you have macro level conflicting order flow, you're gonna have a bad time, right? Because if, say, on the daily chart you have people buying and selling, or rather people distributing, but people also loading up for the bull run, right on top of a benchmark that we have previously defined, if you try to trade that information on the shorter term time frames, you're going to get these kinds of moves. Large reactionary periods of institutional order flow being iceberged into the market, and the subsequent consolidation ranges, well, there's really no volume behind them. Why? Because there's uncertainty in the market. If you have large reactionary moves, like we're seeing here, okay, and the subsequent consolidation periods have no volume, instead of, say, trending mean reversion periods, that implies that we're getting macro level order flow. So, with this in mind, I don't want to make any predictions, because any kind of significant move is going to have lateral mean reversion instead of trending mean reversion, and it's just sloppy. It's not fun. Cat with chart says, check the longest overexpanded period on Bitcoin 4-hour chart from November, the 1730 period. Hey, that's lovely. And I'm assuming that's roughly 250 times 6. So let's check it out. What you just gave me is the higher resolution version of that value. So let's check 1730. Okay. Yeah. Same as the daily 250. Or rather, a more accurate representation of the daily 250. Okay. Thank you, Kat. Very nice pivot you've provided me here. And for anyone who's watching this on the actual trading view video, I actually am simulcasting this on YouTube, and people are giving me their inputs in the YouTube comments. So if you randomly hear me talking to myself, it's because of that. So, yeah, dude, this is so much cleaner than the daily. I'm really happy you looked this up on a higher resolution. Thank you. Yeah, that's a lot cleaner. That gives me a lot more confidence in at least a short-term bearish perspective. Of course, here's how we're going to play this, guys. If we are above this pivot of the 1730 MA or the daily 250, not the daily 250 anymore, right? Because daily 250 is actually around here, but this is a more accurate representation. So this beautiful pivot right here, if we're above it, well, sure, I'll commit to the bullish bias. But really, what makes the most sense, because, well, now that I have this perspective, thank you, Ken, is retest, 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 and hopefully rejection. That's what I'm betting on. At least very, very low leverage with a small portion of my portfolio. All right, I'm mostly tether right now because I just don't like the risk profile of staying long here. It's all about risk, guys. It's not about what's going to happen. It's about risk. Because I think the risk of us continuing to go up. Okay, here's how I see it. This is what I'm doing. I know we will eventually, I don't know when, we will eventually retest the weekly 200 before the bull run starts. I know it's going to happen. It's almost guaranteed. Right? We will eventually retest the weekly 200 moving average. Right? If you want to check how far down that is, well, that's going to be a 30% gain on 70% of my portfolio. Why? Because I'm 70% tethered out. So here's what I have to ask myself. Will I be able to perform an almost guaranteed 30% increase on 70% of my portfolio if, to say, I were to buy into Bitcoin and then trade altcoins in a downtrend? No, I don't think I'm going to be able to outperform sitting out and doing nothing, right? That's what this is about. Maybe I'm going to be wrong, and maybe Bitcoin's going to continue going up. Fine. The bull run isn't going to start until we retest those previous values. So, yes, I'm going to miss out on some profit. I'm going to lose Satoshi value. But eventually, I'll be able to buy in a much more comfortable area where there isn't high price volatility, where there isn't conflicting order flow, and I'll actually be able to take reasonable positions in a settled area that I like. Okay? That's the plan. And look, yes, you can sit on the lower time frames and do coin flips and make money, but I don't think it's logical. It's not worth it. I have very low confidence in this entire range. I am not very confident what's going to happen here, so I'm essentially sitting it out and waiting. I don't always need to have an opinion. It's very important. I got a question that says, what about the weekly 50? I should probably check on that. Let's do the BLX so we can at least compare these charts. Beautiful. What we got here? I'll put a space in there and it still did it. That's cool. Show weekly 50, please. What about the weekly 50? This is the daily. No wonder it doesn't make sense. There we go. I don't know about the weekly 50. I think the benchmark of the 4-hour longest overextended period is going to be a stronger pivot than, say, the weekly 50. Although, I wouldn't be surprised if we had a lateral move here and the weekly 50 travel down to meet price. That would be acceptable. Because, guess what we can also do? Yeah, I guess that's a good note. Good question. I like you. So, yeah, the weekly 50 was the smackdown point of the previous range, which is cool. Okay. Yeah, I can agree with that. It might go up there, but I won't bet that it's going to go up there until the 250s daily is crossed, right? So, what happened here is we had, right, that compressing down, and it's trading sideways. And then whichever way Bitcoin broke first, we either had to go below the weekly 50 or below the weekly 200 or above the weekly 50 to actually define sustainable direction. So, well, we can actually just do the same thing on the current crash pattern, right? Okay. If you want to be safe, chances are we're not going to go above the weekly 50, and we're not going to go below the weekly 200. So, price is going to do whatever the hell it wants in this range. Probably do loop-de-loops if it wants. But eventually, it's going to break up above the weekly 50. If you don't want to do anything in Bitcoin except buy it when it goes above the weekly 50, cool. Do that. Honestly, if you just enter a leveraged long, either on the weekly 200 or above the weekly 50, you're going to do great. That's what you want to do. But I think it's going to be much better for you if you sit back here and take these very predictable and similar charts and trade these instead of, say, going down to the 3-minute chart and trying to play God with information you don't fully understand, because I sure as hell don't understand what's happening down here, at least not fully. I'm sure as hell not going to bet my money on it. And that's the danger of any tool set that allows you to project bias. Any tool set that lets you have an opinion on any time frame on any period, that's going to hurt you. Why? Because, well, you always want to have an opinion, so you're always going to project an opinion onto the chart. Right? You want bullish price action, you're going to draw a bullish scenario with your Elliott waves. You're going to draw a bullish scenario with your Fibonacci retracements. That's not good. This is completely subjective information, or mostly subjective. I mean, I do choose the periods. Unless, of course, it's 3D wave PM, then it gets complicated. But I am not able to imply a direction right here, except maybe this small little bit of expansion to the upside. Cairo, good question. Why would it bounce off the weekly 200 and not break it downwards, or we don't know? This is one of the only times where I am obligated to say an appeal to authority fallacy, and it's one that I believe. I do believe institutional or macro level institutional benchmarks actually do mean something because they are indicative of long-term performance. So really, the only time I'm going to tell you to use something because everyone else uses it is on the weekly chart. You're going to be fine up there. If you want to use retail investment strategies, but you only want to do it on the weekly chart, you're going to do really well for yourself. If you want to use lagging indicators and candlestick patterns, do so on the weekly. It's the only place I'm going to condone that. Okay? This has been fun. Thank you for my Bitcoin update. I'll see you later, TradingView. Nice work, guys. Probably check up on the SPX, eh? Okay, this is going to be really relevant. I'm excited about this. $140, let's do it. Yeah. Betting on that rejection would be a pretty good get. I would bet on that. I think that's all I'm going to say for today, folks. This has been fun. I'll talk to you all later. I want to get outside. It's really nice out. Have a beautiful day.